In Chapter 6, we're going to be entering transactions related to investing and financing activities. Investing activities are activities where long-term investments are acquired or fixed assets are purchased. Financing activities include selling stock, paying dividends, or borrowing money. So the first transaction we're going to look at is the purchase of a fixed asset. Remember, fixed assets are used over more than one accounting period and are depreciated over their useful lives. So the first asset we'll purchase is a truck, and we are going to write a check for this. So we go to New and Check, and our payee is not in the system yet, so we're going to add a new one, and the name of that payee or vendor is Sunset Auto. And under the type, we need to make sure we indicate that this is a vendor and not a customer or an employee. Okay, we'll just save that, and we'll come under Category, and the account that we're going to enter is Truck. It's one of our fixed asset accounts. There it is, and we want it under the original cost. So Truck is the main fixed asset account, and then depreciation and original cost are sub-accounts. So when we enter the original cost, on the financial statements it will subtract the depreciation, and then the truck account balance will be the difference between the two. But this is the purchase price, this is what we paid for it, so we're going to enter it into the original cost. Okay, so the amount is $2,500. We'll hit Tab, and then we will save and New. Okay, the next purchase we're going to make is to Tania's Nursery. That's already in there. And we are going to add a new category here, and it's for machinery and equipment. So I think I've told you before, you have to be super careful when you're entering a new account. The account type and the detail type have got to be exactly right, or it's not going to show up correctly on your financial statements. So we are purchasing machinery and equipment, so that is a fixed asset. And the detail type is fixed asset. Since it's equipment or machinery and equipment, that is an option, so we're going to click that. The name of the account is machinery and equipment, and then we're going to go down and click in the track depreciation of this asset. When you click track depreciation of this asset, original cost and the depreciation box pops up. So it creates two sub-accounts underneath the machinery and equipment account. So we are going to save and close, and the amount that we're paying for the machinery and equipment is $1,000. Oops. Okay, so we'll save and close that transaction. The next transaction we'll enter is the purchase of a long-term investment. So to do that, we click New and go to Check, and we're going to have to enter a new vendor here. So our vendor name is Scott Trade, and we need to make sure that Scott Trade is listed as a vendor and not a customer or an employee. And so we'll save that, and we'll come down to the category, and the category will have to add New as well. All right, the account type here is going to be other assets, and the detail type is other long-term assets, and then the account name will be investments. So we'll save and close, and the amount of the investment is $3,000. So now we can save and close that transaction. Okay, the next transaction we're going to record is the sale of stock and a payment of dividends. So we'll go once again to add new. The next transaction that we'll enter is a financing transaction, and it involves the sale of stock. So if we've sold stock, we're going to make a deposit. So we're going to click New and Bank Deposit, and make sure that checking is listed as the account up here, because we want to make sure that the deposit goes into the correct account. Then we're going to go down to add funds from this deposit. So we need to tell who the deposit is from, and we're going to have to add a new vendor, and that's going to be WB Investments, and going to change that to vendor and just save it. Okay, and now the account, we're also going to add a new account here. So add new, and we're going to add the account common stock. So common stock, the account type, it's an equity account. It's like capital. So if you haven't had accounting 2, you may not know that common stock is just the equivalent of the capital account, but for a corporation it's called common stock. So we're going to click equity as the account type. The detail type is common stock, and the name of the account will also be common stock. So we're going to save and close that, and the payment method was with cash, or sorry, check, and then the amount was $10,000. And now we'll save and close. Alright, the next thing that we're going to do is to pay dividends to shareholders. So if you've not had accounting 2, when you pay dividends to shareholders, what you're doing is returning some of the earnings from the corporation to the owners or the shareholders. So to do that, we're going to click New and click Check, and we have a payee that we need to add new, and that would be Shareholders, and we're going to put vendor, keep them as a vendor, save that. Okay, and then on the category, we're going to click retained earnings, because dividends come out of a company's retained earnings. There it is. Okay, and the amount is $12.50, and so we save and close that. In the next transaction, the company has borrowed money from a bank. So to record that, we're going to click New, and you know when you borrow money, you should be getting a cash or check from the bank. So we're going to click Bank Deposit, and we're going down to add funds to this deposit, and on the received from we have to add a new vendor, and that is going to be the Bank of La Jolla, and they are a vendor, so we'll save that. Then we're going over to the account, and when we borrow money, and this is a long-term note, we're going to credit the account notes payable. Okay, and the payment method was by check, and the amount was $15,000. Okay, so we'll just now save and close. So you know, when you borrow money, there are payments due in repayment of that loan. So in the next transaction, we're going to enter a payment that includes both principal and interest on the note. So we'll click the new and check, and we're going to have to add a new vendor called the Bank of San Diego. And they are a vendor. We'll leave vendor there and click save. Okay, we'll come down to the category, and in there we're going to this time debit notes payable, but the account is notes payable that's being affected, but only for the principal portion of the note. So $25,000 is the principal amount. Then we're going to go down to the next line, and we're going to add a new account. And this is going to be an account called interest expense. So that account type is an expense. The detail type is interest paid, and we want to name the account interest expense. So we'll save and close, and the interest expense that we're paying on that note is $1,000. So now notice that our total check is for $26,000. So now we'll save and close. The last transaction we're going to look at in Chapter 6 is the purchase of a fixed asset by issuing debt. In other words, we're going to purchase a truck, but we're going to do that with a note instead of paying cash for it. So in order to do that, we're going to click New, and we're going to do that transaction using a journal entry. Okay, so our first account is going to be truck original cost, and we're going to increase the truck, which is an asset account, with a debit for $3,400. That was the cost of the truck. Okay, then we're going to enter the note. So we'll find notes payable, and we're going to increase that liability with a credit for $34,000, and simply just save and close.